Welcome to my channel. In this class, we'll be dealing about the net cash flows from operating activities under indirect method. Indirect method is the method that is commonly used for calculating the operating activities, cash flows from operating activities. Indirect method of ascertaining the cash flows from operating activities begins with the amount of net profit or loss. This is so because the statement of profit and loss incorporates the effects of all the operating activities of an enterprise. However, the statement of profit and loss is prepared on accrual basis and not on cash basis. There are two methods of preparing accounting. That is on accrual basis and on cash basis. Accrual basis means the income earned not received, and also the expenses, the outstanding expenses should be shown. Cash basis means the income or the expense that is already received or paid should be included. Moreover, it includes certain operating items such as interest paid, profit or loss on sale of fixed assets, etc., and non-cash items such as depreciation, goodwill written off, dividend declared, etc. Therefore, it becomes necessary to adjust the amount of profit or net profit or loss as shown by the statement of profit and loss for arriving at the cash flows from operating activities. An example is given, the statement of profit and loss for the year ended 31st March 2017. The first item is revenues from operations, that is 1 lakh. Other incomes include profit on sale of land. Then total revenues, that is by adding these two revenues, that will be 1 lakh 2000. Then expenses. Under the head expenses, the cost of materials consumed. Cost of materials consumed means the materials that are used in the production process, already used in the production process. The raw materials, 30,000. Purchases stock in trade, 10,000. Employees benefit expenses, then finance costs, depreciation, other expenses. Then we have to add the total of all these expenses to arrive at the total expenses amount. By adding all these items, we get the amount 72,000. Then profit before tax, that is arrived at reducing the total revenues minus the total expenses, that is 1,02,000 minus 72,000, that will be 30,000. Then the above statement of profit and loss shows the amount of net profit of 30,000. This has to be adjusted for arriving at the cash flows from operating activities. There is some adjustments has to be made with the profit before tax amount 30,000 to arrive at the cash flows from operating activities. First item to be taken as depreciation. Depreciation is a non-cash item. Depreciation means decrease in the value of fixed assets. So, non-cash is going out or cash is receiving here. So, the 5,000 amount is regarded as depreciation. So, this 5,000 charged as depreciation does not result in any cash flows. Therefore, this amount must be added back to the net profit for arriving at the correct amount of the cash flows from operating activities. Then finance cost of rupees 5,000 is a cash outflows on account of financing activity. Therefore, this amount must be added back to the net profit while calculating the cash flows from operating activities. This amount of finance cost will be shown as an outflow under the head of financing activities. That is, it should be reduced when calculating the net income from the financing activities. Other incomes include profit and sale of profit on sale of land. It is a cash inflow from investing activity. So this amount must be reduced from the amount of net profit while calculating the cash flows from operating activities. Thus, above example gives you an idea of various adjustments to be made on the amount of net profit or loss. There is other adjustments also relating to the changes in working capital which are necessary. There is the items of current assets and current liabilities to convert the net profit or loss which is based on accrual basis into cash flows from operating activities. Therefore, an increase in current assets and decrease in current liabilities are reduced from the operating profit, and the decrease in current assets and increase in current liabilities are to be added to the operating profit so as to arrive at the exact amount of the net cash flows from the operating activities. These items to be studied well before going into the problem. As per the accounting standard 3, under the indirect method, net cash flows from operating activities is determined by adjusting the net profit or loss for the effect of non-cash items such as depreciation, goodwill written off, provisions, deferred taxes, etc. should be added back. All other items for which the cash effects are investing or financing cash flows. The treatment of such items depends upon their nature. All investing and financing incomes are to be reduced from the amount of net profits while all the expenses are to be added back. For example, the finance cost that is already we have discussed, which is a financing cash outflow to be added back, while other incomes such as interest received, which is an investing cash inflow, is to be reduced from the amount of net profit. Dividend declared is a financing activity and is therefore added back to the net profit and shown as outflow under financing activity. Changes in current assets and liabilities during the period increase in current assets and decrease in current liabilities are to be reduced, while increase in current liabilities and decrease in current assets are to be added up. That we have discussed. Then a performer is given cash flows from operating activities under indirect method. The items that we have already discussed, that is net profit. The first item will be net profit or loss before tax and extraordinary items. These two items should be added, and from this the deductions to be made. The items for reducing is given here 1, 2, 3 and 4. Then from this we have to add increase in current liabilities and decrease in current liabilities. Then we have to less decrease in current assets and decrease in current liabilities. Then this the net item will be the cash flows from operating activities before tax and extraordinary items. Then we have to reduce the income tax paid from this. Then plus or minus the effect of the extraordinary items as per the questing given. By doing all these items, we get the net cash from operating activities. As stated earlier, while the working out the cash flows from operating activities, the starting point will be the net profit before tax and extraordinary items and not the net profit as per the statement of profit and loss. Income tax paid is deduced as the last item to arrive at the net cash flows from operating activities. That's all for today. In the next class, we will discuss the problems relating to this. Thank you.